Hi everyone, my name is Ivan Aptana and I will be presenting on the retirement plans for self-employed taxpayers. Now, there are two types of retirement plans that I will be focusing on today, and they are the SEP IRA, also known as the Simplified Employee Pension, and the Individual 401k. Now, the SEP IRA is the Simplified Employee Pension. It's an individual retirement account that an employer or a self-employed person can establish. It often has a higher annual contribution limit than standard IRAs. In a sense, it is a cross between a traditional IRA and a 401k, as it receives employer contributions like a 401k, and contributions are vested immediately like a traditional IRA. Now, the benefits that it has is that it's easy to set up and operate, it has low administrative costs, it's flexible, and it has a flexible annual contribution, and it has a good plan if cash flow is an issue. And then lastly, employers must contribute equally for all eligible employees. Moving on to establishing an SEP IRA. Now, there are three basic steps that you must do. First, you must execute a formal written agreement to provide benefits to all eligible employees. Second, you must give each eligible employee certain information about the SEP. And lastly, the SEP IRA must be set up by or for each eligible employee, and is easily established by adopting the Form 5305 SEP. Once the Form 5305 is used, no other retirement plan can be used. Information given to each eligible employee is a copy of the Form 5305 SEP, its instructions, and other information listed in the Form 5305 SEP instructions. And an IRS model isn't considered adopted until you give each employee this information. Moving on to the eligibility, an eligible employee has to have reached the age of 21. They have worked for you in at least 3 of the last 5 years, and they have received at least 750 in compensation from you in 2024, and the amount remains the same for 2024. Now, while these eligibility requirements are for small businesses, it still applies to a self-employed taxpayer, uh, because a small business can be run on one single person. Now, the contribution limits for the SEP IRAs for 2024 is that it has to be the lesser of 69,000, or 20% of the or 20% multiplied by the net Schedule C income deduction for employees' portion of self-employment taxes paid, and the employer's portion is also 50%. Moving on to the example. Jason, assumed the age of 64, reports Schedule C net income of 50,000 during the current year. If he sets up a SEP IRA for himself, what is the maximum contribution he may make to the plan, assuming he has no other source of employment or self-employment income? Okay. Now, to solve the problem from the previous slide, we could use the graph, this table here. Now, first we would have to indicate the first limit on the contribution, which is the 69,000. Moving on, we would have to get the number that is found in the Schedule C net income minus the self-employment tax deduction, and then from the number given, which was 50,000, we would have to multiply that by 92.35%, multiplied by 15.3%, multiplied by 50%, and once you get the answer, these number from there, you subtract that by 50,000 to get 46,468. Next, we would multiply that 46,000 by 20% to get our second limit on the contribution, which would come out to 9,294. Now, this contribution, to choose which contribution to pick, we would have to choose which is the lesser of the two limits that we have here. And since 9,294 is the lowest, that's the maximum contribution that Jason would have to contribute to his SEP IRA. Alright, moving on to the individual 401k. Now, this is also known as the one participant's 401k, solo 401k, solo K, unit K, and one participant K. Now, it is a traditional 401k plan covering a business owner with no employees, or that person and his or her spouse. And as a refresher, a traditional 401k plan allows eligible employees to make pre-tax elective deferrals through payroll deductions. These plans have the same rules and requirements as any other 401k plan. Now, the benefits of the 401k is that there is a higher contribution limit, the tax deductions, there are tax deductions, there's possible Roth component, and it avoids the UBIT, which is the unrelated business income tax. Now, the contribution limit is deferred up to $23,000, and as an employer, you can contribute up to $46,000 of your income, not to exceed 20% of your self-employment income or 25% of your W-2 income. Now, contributions to a solo 401k can be a tax deductible, and you can also elect to make tax deductible deferrals, or you can elect to make tax-free Roth deferrals. And with a Roth component, you make deferrals to the account with after-tax dollars. Now, your funds grow in a tax-free environment, and when you start taking distributions, you will have zero taxes to pay, providing all rules are followed. And you have the possibility to avoid unrelated business income tax on leveraged real estate. Now, how to establish a 401k. Now, it has four basic actions where you adopt a written plan, arrange a trust fund for the plan's assets, develop a recording keeping system, and provide plan information to participants. Now, plans begin with a written document that serves as the foundation for day-to-day plan operations. A plan's assets must be held in trust to ensure that assets are used solely to benefit the participants and their beneficiaries. It must have at least one trustee to handle contributions, plan investments, and distributions to and from the 401k plan. And having an accurate record-keeping system helps track and properly attribute contributions, earnings and losses, plan investments, expense, and benefit distributions in participants' accounts. Lastly, as a 401k plan is in service, you must notify employees who are eligible to participate in the plan about your plan's benefits and requirements. Now, who is eligible for a individual 401k? Now, it includes a mix of rank and file employees and owners/managers, but it may exclude anyone younger than 21, have completed less than 1 year of service, are covered by a collective bargaining agreement if retirement benefits were subject of good faith bargaining, and are certain non-resident aliens. Now, the contribution limits for 2024 are the lesser of 69,000, or 20% multiplied by the net Schedule C income deduction for employer's portion of self-employment taxes paid, plus 23,000. Now, there's an additional $7,500 if you are the age 50 or older by the year end, adding up to a maximum contribution of 76,500. Now, employee contributions includes the employee contributions includes 23,000 and a $7,500 catch-up. It has a Roth option available for all contributions, and then the employee contributions are the contribution limit minus the employee contributions. Moving on to the individual 401k example. Jason is 64 years old at the end of the year. He reports $50,000 of self-employment income and has no other sources of income. What is the maximum amount he can contribute to his individual 401k? Now, to solve this example, we would follow a table similar to the table that we use in the SEP IRA, but the only difference is that there are more steps to this. So, for the first four is the same as if you were to do an SEP IRA, but now we would have to be working on the employee's contribution. Now, as I've said earlier, the limit on the contribution is 23,000, and we would list that there. And now the second limitation would be a combination of both the limit of the employee contribution and the limit of the employer's contribution. And in this example, it would come out to 32,294. Now, for the maximum contribution before the catch-up contribution, we would need to decide. We would need to pick between the lesser of 69,000 and the 32,000, which in this instance would be 32,000. Now, to finish it off, since Jason in this problem is 64 years old, we are able to add in an additional 7,500. So with that add-on, his maximum contribution for his individual 401k would be $39,794, and as long as it doesn't exceed the number in line 2 in this table, this would be perfectly fine. But if, for example, Jason is not, if Jason is around 49 years old or 48 years old, we wouldn't need to include the 7,500 there. Now, some changes that are going to occur in 2025. Now, for both the SEP IRA and the individual 401k, the combination employee and employer contribution would increase from $69,000 to $70,000. Now, only for the individual 401k, the contribution limit would increase from $22,000 to $23,500, and the catch-up contribution would remain the same at $7,500 if you are between the ages of 50 and 59 or 64 years old or older. Now, anyone between the ages of 60 to 63 would get a catch-up contribution of 11,250, which will increase the total amount of contribution that someone will get from the original 31,000 to 34,750. And that concludes my presentation. Thank you for watching.